Today, I've got PK Gupta from Australian Property Mastery with us. PK, welcome to the show.
Hey Nathan, good to be here.
Thanks for joining us, and maybe tell us a bit about yourself before we get stuck in.
Sure, I started investing in properties about 12 or 13 years ago with my wife, and I'm really a bit of a nerd, so I went really hard into data, and I think the stars aligned. We did pretty okay for ourselves, and these days I help people do the same, but without needing a buyer's agent, really focusing on data and mentoring.
Awesome. Well, thanks for joining us today. Today, we're going to talk about the three suburbs to avoid in Brisbane, as well as three suburbs to gravitate towards. So starting off on the three suburbs to avoid, what's your recommendations here?
So I think the first one, and I hear this a lot, is people hear about this suburb called Toowong, which is on the south side or central south side of Brisbane. It's close to the St. Lucia University of Queensland. And, because of that Queensland University, everyone thinks that, oh, Toowong must be a fantastic suburb close to this infrastructure story. But really, the problem with Toowong is, and I'm talking about units here because houses are just far too expensive in Toowong. The problem is that there's always building new and new towers to accommodate student accommodation. So supply is really an issue. And what you see is, despite Australia going through this massive property boom in the last 1 or 2 or 3 years, Toowong units have been basically dead flat. So I sort of hate to think what will happen going forward.
Definitely. So I guess the supply and the increased supply doesn't really give you that capital gains or the capital appreciation in the future with Toowong, which makes a lot of sense. I myself had a property in Ashgrove. It was a unit, my first home, and I had that for about 8 years. I had the same problem. They had heaps of new properties being developed in Brisbane city centre, in Fortitude Valley, a bunch of areas. And for the last sort of 8 years that I held it, I actually lost money when I sold it. So good tip there. Really appreciate that. So I guess Toowong being the number one area to avoid if you're looking at units. What's the number two suburb that you have there, PK?
So for maybe people who have a higher budget, Toowong units are like sub five, sub $600,000. For those people who are probably watching and they're like, I got $1 million, I got $1.5 million to splash, you know, tempting as it is, you have to be very careful around buying right now in the cycle around Burbank, Chandler, these sort of south eastern sort of, they're only about 5 kilometers or 5 to 10 kilometers from the CBD. And, on the east-hand side, you've got the ocean. So like, from a sales and marketing perspective, it's a really easy story to sell. But the problem is that these areas have gone up, especially Burbank. It's gone up, by about 80% or 70 to 80% just in the last 3 years. So that kind of growth, can't sustain itself. Oftentimes people think, oh, look, something has grown in the past and therefore it will grow in the future. Sometimes it's the opposite, because regression to the mean, everything has to average out statistically at sort of 7 to 8% over the long term. So this is a very tempting area to buy in, especially if you've got deep pockets, but rental yields are like at 2%. And the days on market, which is really interesting data point, it's jumped literally in the last few months from 50 days to 100 days, which means that just a few months ago, it was taking, just over a month to sell a place, and now it's taking over 3 months. And you can see how the demand has really fallen off a cliff in Burbank.
Yeah, definitely. So Burbank being an area to avoid, I guess high prices, low yields makes it a bit more of a challenging investment or a purchase to make sense. And number three, what's your number three suburb to avoid in Brisbane?
So it's like super hotly talked about, by people in Brisbane, but especially people in investors in Sydney and Melbourne who may or may not know better. Woodridge. Woodridge is in the Logan City Council. And I know we're talking about Brisbane, so forgive me, this is in Logan City Council. But, Woodridge has gone up. It has definitely gone up. However, the problem with Woodridge, and the reason I think it's not a good place to invest right now, is that the percentage of renters, of all the properties, more than 65 to 75% of properties are rental properties. So in the middle of a boom, in the middle of a rental boom as well, all of that is okay. But give it 1 year, give it 2 years, give it 3 years, when this boom abates and subsides, what you'll find is that landlords are just going to compete against each other really hard for the same tenants. There's no real owner occupier appeal. And it's once again a bit like the other Burbank. It's had such a great growth run. I think it will be an underperformer for the next 5 to 10 years.
Excellent. So Woodridge coming in at number 3. And for our viewers out there that want to do that research and understand how they can find these suburbs, so for example, Toowong, Burbank, Woodridge, they've got all different issues. As you said, Toowong, oversupply, Burbank, Woodridge, getting to a point where potentially too many investors in Woodridge, Burbank becoming a bit more too expensive. What are some practical steps they can take to potentially do this research, not if they're only looking in Brisbane or anywhere else? What can they look at and how can they get to the bottom of these sort of things that you've talked about here?
Yeah, totally. Look, I'm a big sort of connoisseur of data. So even though I'm saying a whole bunch of stuff right now, you can kind of just ignore it. What you should do is do your own research. And it's quite simple. These days, there's so many publicly available data websites, and you look at things like stock on market percentages, you look at things like days on market trends, you look at things like online search interest ratios. We talked about supply. You can figure that out just going on a council website or the ABS website and looking at building permits or building approvals. There are all these different data sets, job advertisements that are all freely available these days. And you can kind of, it doesn't take that much time. You don't actually need to be a professional. You can quickly assimilate, okay, well, demand seems to be super strong. For example, days on market is low, but supply is increasing. So prices are probably going to be dampening. Or demand is super low and supply is increasing. So prices might be going down, which is the case with many of these suburbs.
Excellent. We've talked about the 3 areas to avoid. Let's have a look at the 3 areas that you recommend to gravitate towards.
So one that I'm quietly confident about, I should say quietly because it can never guarantee anything, but the data seems to stack up really well, is Tagum. Now, for anyone who's heard of Tagum, you know that it's got this sort of stigma of being a relatively lower socioeconomic area just on the north side of Brisbane. I think it's about 15 Ks or 15, 20 Ks from the CBD, North Brisbane, still in Brisbane City Council. There is a set level of crime that hasn't really abated if you look at the statistics over the last 5-10 years. But the thing is that houses in Tagum have just gone up all around Tagum as well, Strath, Pine, and other areas, Zilmere. So what you're seeing is this big divergence between townhouses price and house price. And so what generally happens is townhouses catch up. Now, that doesn't automatically just magically happen, but the data that I referred to before is very strong for townhouses in Tagum. And the thing I'd just like to reiterate as well is just because an area is ridden with crime, that doesn't mean that prices don't increase. We have examples and for people in Melbourne, like Frankston, not the best area in terms of crime, but it's gone up so much in the last decade. In Sydney, places like Redfern. So don't just discount a place like Tagum just because it's, lower socioeconomic.
Yeah, look, I remember back when I bought my first home about 10 years ago, I was looking at units in Ashgrove at the time, but I was also considering an area in Stafford, which was about within a 10-kilometer radius. Properties back then were going for about 400,000. I'm kicking myself still today because I didn't buy a house there. And back then there were a lot of government houses that were getting resold. They were actually at the end of their lives with the government. They were selling them up. Now you can't get a property for more, anything less than $1 million. So I think, Tagum an area, as you said, a little bit of higher crime rate. There's a bit of a regentrification going on there, bit of a change in the community. So it'll be interesting to see how that one forms out. But that's, yeah, definitely a good suggestion. What about number 2? What's the second area that for investors and owner occupiers out there that they should probably at least put in their wish list of areas to look at?
Yeah, I think you mentioned like a really important factor, which is gentrification. It's not just how current crime or current incomes are, but how much they're improving. And there's a suburb called Northgate, once again, on the north side of Brisbane, around Banyo, around Nunda, which I think is like almost like a hidden secret. I think people just don't recognize it for some reason, but incomes have been increasing really fast in Northgate. Previously it used to be a blue collar area. Now it's sort of a young professionals, husband, wife in their 30s with a couple of young kids sort of thing. And it's super close to the freeway, super close to like a DFO shopping center, super close to the airport. Everything's going for it. And that gentrification, I think, when we invest in suburbs or even to live in, we want to be buying in areas that are getting better and better, not that are already awesome and have no further upside. So I think Northgate has got so much potential in the next 5 to 10 years.
Excellent. Northgate as another area to keep a lookout. So what's the third suburb that you recommend?
So the third one is, just like we talked about areas to avoid, and I gave you one that was a little bit more premium, I would say, in Burbank to avoid. Clayfield is one that you should potentially go for in the north side of Brisbane, much closer to the CBD as opposed to, Tagum and Northgate. The thing with Clayfield, and once again, when I'm talking about Northgate, when I'm talking about Tagum and Clayfield, I'm really concentrating my discussion on townhouses, right? Townhouses, you can still get stuff under 500, under 600, 700K. And the great thing about Clayfield is that the prime attraction is this private school, Clayfield College. And up to date, or up to now, it was just for girls, just for females. It was a single sex college. And they've just opened that up to now boys. And if you look on the north side of Brisbane, there's not that great many schools just for boys. There's St. Joseph's Nudgee College, but not so many others. And Clayfield College has a fantastic reputation. I know a lot of people moving within that sort of Clayfield area just so they can send their sons to this area now. And, it's a premium suburb, big disparity between houses and townhouses. So I think townhouses have a long way to go.
Awesome. Well, Clayfield being the third place to gravitate towards. Now, how do you feel with the Olympics coming up in 2032? This is going to play out for the property market in Brisbane, and those that are interested in the Brisbane property market, what they should be aware and what potential upside or downsides there may be.
Yeah, no, it's a terrific question. And I've done a couple of videos on this because I'm a little bit against the grain on this subject. Everyone's saying Brisbane will boom, Brisbane will boom. It's a great place to invest over the long term. I don't disagree, but a lot of the infrastructure that is needed and will be used for the Olympic Games is already there. Like for example, the Gabba, they just have to redevelop it, update it, refurbish it. So it's not like you're building a brand new, set of stadiums and things like that from scratch. All of that was already in train, regardless of whether you have the Olympics or not. Now that doesn't mean that Brisbane's not going to do well, but I think the sort of sentiment may be overcompensating for the Olympic Games. But the flip side of that is sometimes if enough people believe in something, it happens anyway. So I know a lot of people in Sydney, Melbourne, they see Brisbane as this sort of affordable mecca of property investing or moving their families when, to get the affordable type of lifestyle. And if enough people think that way, that will then start transpiring in the data, and that will mean that it's a self-fulfilling prophecy. So I definitely think Brisbane's got way more upside than Sydney or Perth in the next 10 years. Is it because of the Olympics? Maybe, maybe not, but the Olympic Games definitely doesn't do any harm to it.
100% PK. And also we're seeing a high increase of net migration in Queensland as well. So that definitely has another factor to take into consideration. What do you say to those buyers out there that are sort of waiting to time the market? They see the news, they see talks of the market going down by 18% in Sydney and Melbourne, talks of Brisbane market potentially going backwards by 6% next year. What do you say to those buyers out there that are actually sitting on the fence and they're going, should I wait to get in the market? Is now the right time?
I think there's two things. The first thing is like in stock investing or like cryptocurrency, there's this concept of buy the dip. As soon as prices fall, that's when you buy, supposedly, and then you get the gains. Property markets don't really work like that. They don't just go up and down. They have a boom period, and then there's a sort of long or elongated consolidation or plateau period, and then there's another, rapid price movement upwards. So it's not like if Brisbane, let's say, or any of these suburbs that I've mentioned goes down by 10%, that all of a sudden you can time that perfectly and the next year it will go up by 10%. That's not how real estate works. So it's really comes down to markets within markets. And that's the second point. Even right now, like I've shared with you just now, there are suburbs or markets within markets that are still growing. Like even though the media is saying that Brisbane is falling, and on aggregate, it definitely is. The three suburbs that I mentioned at the end there, amongst many others, are actually still at the start of their growth cycle for a particular type of dwelling, i.e. townhouses. So I think, for property investors, they sort of owe themselves enough education to not just wait for the dip or wait for the bottom, but to invest when they can. But it's where you invest that's more important than when you invest.
That's awesome. Awesome advice, PK. Did you have any other final thoughts? And then maybe finishing off with how our viewers can find you?
No, I think like right now there's a lot of negative sentiment in property circles, and this channel as well as my channel, we're sort of biased in one sense. We want people to engage with real estate, but like the truth really is that there is a lot of fear at the moment. If you just zoom out and see the forest from the trees, it's still a good time to invest in property. It's just more difficult than where it was last year or 2 years ago. You could put a blindfold on and just throw a dart and you'd make money. That's not the case right now. So I think right now you really need to focus more and more on the data and go micro in your analysis, as opposed to should I buy in Brisbane or not? It's more about should I buy in this suburb versus another suburb.
Awesome, PK. And how can our viewers find out more information about you?
Yeah, look, I have a YouTube channel, Australian Property Mastery, with PK. You can go check it out. There's about 400 videos there, very similar to your guys' awesome channel, and also my Facebook group, Australian Property Mastery with PK on Facebook. There's more than 20,000 investors and members in there. Great communications, great discussions, great narrative that kind of dispels the fear and scaremongering, and people who have actually made a lot of money that folks can learn from.
Awesome, PK. We'll leave links below, and thanks very much for joining us today.
Thanks so much, Nathan. Appreciate it.